Welcome to Tax Zone by Ganges. Today's section is about new fee payment process for tax residency certificate applications with effect from 3rd October 2025. A tax residency certificate or TRC is an official document issued by the Federal Tax Authority. It confirms that a juridical person or a natural person is recognized as a tax resident in UAE for a specified period, usually 1 year. A TRC plays a vital role in international taxation and is essential for anyone seeking to benefit from a UAE tax agreement and global credibility. 1. Avoids double taxation. A TRC allows natural person and juridical person to claim benefits under the UAE's double taxation avoidance agreements. This ensures that the same income is not taxed twice, once in the UAE and again in another country. 2. Facilitates business and investments. It also helps in cross-border contracts, international banking, foreign investments where proof of tax residency is often required. Holding a TRC enhances trust, transparency, credibility in global business dealings. 3. Avail tax exemptions. With a valid TRC, residents can reduce or completely avoid withholding taxes on foreign income, such as dividend, interest, or royalties. This means a more effective tax planning, higher return on international income. 4. Confirm tax residency. Most importantly, a TRC serves as an official proof of UAE tax residency for both local and foreign authorities. It strengthens your legal standing as an UAE tax resident, supporting compliance and recognition across borders. Determination of TRC for natural persons, that is, an individual, shall be considered a tax resident in the UAE if any of the following three conditions are met. 1. Usual place of residence and center of interest. If the individual's usual or primary place of residence and the center of financial and personal interests are located in the UAE, or if he meets the specific condition and criteria issued by the decision from the minister. 2. Physical presence, 183-day rule. If the individual has been physically present in the UAE for a period of 183 days or more within the relevant 12 months, he is automatically treated as tax resident. 3. Physical presence 90-day rule for nationals and GCC residents. An individual is considered a tax resident if he has been in the UAE for 90 days or more within 12 consecutive months, and he is either a UAE national, a holder of a valid UAE residence permit, or a citizen of any GCC member state, and meets either of the following conditions. He has a permanent place of residence in the UAE, or he carries on employment or business within the UAE. Next, tax residency of a juridical person in the UAE. A juridical person refers to a company, corporation, or a legal entity. It is considered a tax resident in the UAE if it meets any of the following conditions. Condition 1. Incorporation in the UAE. The entity was incorporated, formed, recognized under the UAE legislation. Note: branches of foreign companies registered in UAE are not included. This indicates strong legal and operational presence in the UAE. Condition 2. Tax law recognition. An entity is considered a tax resident under the UAE tax law, regardless of its incorporation, place of incorporation. This ensures companies recognized for tax purposes can benefit from UAE tax treaties and compliance rules. From 3rd October 2025, the Federal Tax Authorities has updated the fee payment process for the tax residency certificate. Let's look at the key changes. Fee. Previous process before 3rd October 2025. Fee was paid in two stages. Initial submission fee of AED 50 at the time of application. The remaining certificate issuance fee after preliminary approval. Updated process from 3rd October 2025. Fee must be paid in full upfront before submitting the application. So the main change is that applicants now pay the entire fee upfront instead of splitting it into two stages. Then process flow. Previously, application was submitted, preliminary review was done, approval was given, then payment of issuance fee subsequent to that certificate was issued. In the updated one, applicant has to pay the fee in full, then submit the application, then review happens and certificate is issued if eligible. The process is now simpler and faster with upfront payment. The certificate can be issued after eligibility review. Fee. The fee remains the same and importantly, the total fee has not increased. Only the timing of payment has been changed. Refund policy. Previously, partial risk of loss if rejected after acceptance stage, that is AED 50 paid at the time of inception. Updated, no refund if application is rejected or application is found ineligible. So, applicant should note that under the new process, there is no refund if the application is rejected. Application submitted before 3rd October 2025. Previous processed under old two-stage payment system. Updated. Applications submitted before 3rd October 2025 are not affected and will follow previous two-stage payment process. So act with caution while submitting TRC application. Thank you.